we're making sure I pronounce names correctly. So first we have Barb Matishak, and Barb obtained her license in 1991. And she's built a successful referral business in which over 90% of her business comes from referrals. Her primary focus is with residential resale and relocation, but she also has experience with new construction, land development, property management, and commercial real estate. She's also had the privilege of serving her fellow realtors in many ways, and she has more than 15 years of serving on both the grievance and pro standards committee at both the county and state levels. She was the 2016 president for MCAR, and she serves on the board of directors for BCAR, and she's been on the directors of PAR for more than 15 years. She also manages and trains new agents for RE/MAX 440 Central across Montgomery, Bucks, Lehigh regions, and she teaches at BCAR and Tri-County Suburban. There's so much more, and she's also the co-chair of the education committee, so I get to work with Barb, and I love that. So thank you, Barb. Our next instructor is Matt Scanapico. Matt started his real estate career at his family brokerage, Franklin Investment Realty. 2 years later, he obtained his PA salesperson's license prior to graduating from Temple University's Fox School of Business Honors Program with a degree in finance. He's established himself as a top producing agent in Pennsylvania, and he handles a variety of transaction types. He has experience working with investors, first-time home buyers, relocations, suburban estate homes, condos, commercial properties, and much more. He's closed over 20 million in sales volume so far in 2024. He also just obtained his broker license and recently obtained his New Jersey salesperson's license. I could keep going on you too, Matt, but I want to start the program, so I will stop there. And then Cindy Seener, who is our affiliate member today. She's a licensed loan officer with Guild Mortgage. She is licensed in Pennsylvania, New Jersey, Delaware, and Florida. Guild is a nationwide lender with the exception of New York, and it has been around since 1960. She has been a loan officer for over 6 years, and she's dedicated to helping individuals and families achieve their home ownership dreams. Cindy is going to put some info in the chat after she's done, so if you want to contact her, you can definitely use that. And thank you, and I'm going to turn this over to you guys. Thanks.
All right. Hi, everybody. I'm Cindy Seener, as Lisa said. Thank you for having me today. I am a licensed loan officer with Guild Mortgage. And as she kind of gave you a little brief background, Guild has been around since 1960. They were primarily on the West Coast. They're still headquartered there today, but they have made like a more recent footprint on the East Coast in the last few years. All of my team, so my ops team, were all local to the PA region. I also have an assistant that works with me who was an underwriter for 15 years. So that's always amazing to have right by my side there. So basically we have a whole wide array of products from conventional FHA, VA, USDA, jumbo loans. We specialize with reverse mortgages as well. We also do a lot of down payment assistance. We have many different options, including PHFA. So, if you have first-time home buyers in the area, that's definitely something we can help with. We have renovation loans. We have a lot of non-QM loans that we work with as well for the buyers that don't fit into the general box. One of the things I like to say that does set me apart from others, and this was feedback from my business partners as well as my clients, is I offer a high level of communication. I believe it's really important to communicate, even if that means over communicating, just to make sure we all get to the table and to the finish line. So feel free to reach out. I'll put my information in the chat and look forward to learning more about everyone here.
Thanks so much, Cindy. Sorry, and Matt and Barb, it's to you now.
Okay. Thanks for joining, everybody. We're going to go over how to master tax apps and other tools for realtors. I think Lisa did a great job introducing everybody, myself and Barb. So we're going to get started. So as I mentioned, we're going to go over tax apps, but it's important to understand all the different aspects of real estate, especially when it comes to the financials. So this is not only tax related, but also financial savvy tips for not only running your business, but also to managing your business. It's a full process as being a real estate professional. You got to manage all the different assets of the business. So just a little overview of what we're going to talk about today. The first three are one of the most important apps we use on a regular basis: MileIQ, QuickBooks, and Monarch Money. Other things we're going to talk about is money management practices. It's important to have information that is organized and transparent when you have a business account and credit cards, checking accounts, and so on and so forth. Understanding what quantifies as a business deduction for real estate professionals. Then a more lesser known feature of business structure, which would be creating an S corporation as opposed to a sole proprietorship, and how the tax implications of those two things change. And lastly, this is more in a practice realm for investors, understanding how a 1031 exchange operates. So the applications we're going to talk about first is MileIQ, and I'm not so experienced with that. So I'm going to have Barb weigh in on MileIQ and give you a screenshot of her last month using this software.
So MileIQ is something I've been using now for probably about, God, almost 10 years. Matt, were you able to pull up that one that I had sent you?
The screenshot?
Yeah.
It should be on the screen. I hope it is.
I don't see it.
There's something that says MileIQ on the screen. Is that what you're talking about?
Yeah, but you know what? I'm not seeing the slides anymore. I don't know what happened. All right. Okay, now I'm over on your screen. Okay, sorry about that. Okay, so what this does is this is an app on your phone, and whether you're in your car or anybody else's car, it's going to track wherever you're going. And it's simple and easy to swipe left or right to make it a business or a personal use. This right now is where I'm at currently in 2024. And I typically drive close to 20 to 24,000 miles. So it's nice to be able to have something to document what that expense is going to be, because 90% of my driving is business. And you can see it's already at this point generating almost a $7,500 deduction for where I'm at with that. And it's much better than just turning around and saying, based on my total mileage for the year, do I do 80% or 75% or where am I at with that? This tracks it for you. And it's very easy to use. You can jump onto the app in your phone and do it. And you can also get into it through your laptop and keep an idea on where things are at. So I've loved it. It's only $5 a month.
All right. One of the other apps we're going to talk about is QuickBooks. If I could get this off the screen, let me just move this around for us. Because it's important to feed in this information from the mileage into your business. QuickBooks is going to be able to keep track of everything, whether it be business expenses, your commission income, any employee expenses, anything you have from a business perspective. QuickBooks has a variety of services that give you options. There's very basic QuickBooks plans, for example, the Simple Start, which is $35 a month. And this is all online, so it's all cloud-based. So you could use it on your phone, use it on the go. It's very easy to access this information. It's very consumer-friendly. Intuit has a nice suite of products. Parlaying that, it feeds into a tax service, which is TurboTax. It's owned by the same company. So they shake hands very well. They have the information documented the proper way. And there's a lot of customization. So QuickBooks has a basic real estate professional template for their company file, but you can customize and change things, whether you have different expense categories or different income categories like property management or anything under the sun. You can totally customize what it is. And as you see, they have better pricing for locking in longer term. But you could see just a quick brief on some of the different different programs or plans they have available for their service. I happen to use an old version of QuickBooks Desktop, which I think they're starting to get rid of in the next couple of years. So I'll have to switch over to something cloud-based like this. But this is information to keep track of everything. They have reporting, they have even mileage tracking, their own version of it, cash flow reports, all sorts of documentation to show and analyze your business. It's important not only to understand what commissions you're bringing in, but that your bottom line revenue, you could do 100,000 in commission income, but if you're spending $100,000, your business isn't making money. So this is a good way to track exactly what's going on the day to day and making sure you're keeping up to things. It also helps when you have a nice organized QuickBooks file to be able to work on either your taxes on your own, going through a system like TurboTax, or if you're using an accountant to pass this information right to them. Most accountants are very familiar with QuickBooks, so they can jump in and help clean up your files, help make sure that things are ready to go come tax time when that time of year comes. Another program that I just happened to start using, I had a platform that I used, which was actually bought by Intuit. It's called Mint, and they shut that program down. So I was looking for another budgeting system, and I stumbled across this platform called Monarch Money. And I just created a dummy account to kind of go through. But you can connect everything, both personal and business, into this to track all sorts of things, whether that be your investments, whether that be your checking account, savings account, CDs, your car loans, your mortgage loans. I mean, everything under the sun. This is a very robust platform. As I mentioned, I used Mint, which was an Intuit program. The founder of Mint actually started this company, Monarch. It does have an annual fee. I think it's $100 a year. They're running a bunch of promotions now. I think it's either $50 or $60 a year, but it's well worth it when it comes to the robust features. And again, it has the customization, just like the QuickBooks does, to allow you to keep track of things. So you can connect your bank accounts, and they have connections to everything under the sun. Obviously the large banks, but even stuff like a smaller credit union. I just happen to bank at TrueMark. So all these local credit unions are going to be on here. You can add your accounts. They're going to automatically sync. There's some obviously data concerns with this, but all this is high-end encrypted. This is bank end encryption service. So you should be comfortable with syncing your accounts with their platform. So in doing that, I don't know if it's going to let me do a whole lot without connecting an account, but you can see different accounts and kind of, again, this is a dummy showing asset summary, liabilities, and it tracks business expenses too. So you can monitor different categories of your business expenses, whether it's advertising or whether it's client gifts or whether it's your gas or mileage. It's easy to see, and you can reflect on a monthly basis, on a yearly basis, and even going back beyond that. Once you've used this platform long, it keeps track of everything. They're also implementing a new piece of their program. I'm anxiously waiting for it to come out, is tracking the credit cards that you have. So if you have business credit cards or even personal credit cards, to show when those due dates are and the amount due. It was a feature that was available in Mint, and it's one of the only programs out there that I've come across that has the ability to kind of bring multiple credit cards into one place to see when things are due. So if you have, again, business credit cards with multiple companies, let's say Chase, Wells Fargo, you name it, you can see everything and kind of better track your finances. The other cool part about this program in particular is it allows you to share this with a spouse or a partner in any capacity of showing and managing money together. In addition, you can actually add like a financial advisor if you work with a financial advisor to see what's going on with your net worth, and they can kind of see what's going on in your finances on a day-to-day basis. You could set budgets, you can show reports. This is actually a new feature that they're coming out with their more robust reporting. They manage your recurring charges. I mean, it is really a robust program for a very small cost that is going to give you so much more control over your finances and make it easier for you to manage not only your business, but your personal finances as well. So jumping into that, one of the things I mentioned that's important is having the right reporting. and the right organization. So one of the most important things, it doesn't matter your business structure, whether it be that S corporation, which we're going to talk about, or a sole proprietorship, you want to separate the personal from the business. You don't want to be going back and forth between those things because it's harder to keep track and have accurate accounting records for these accounts. So when you separate, you have a checking account, savings account, you can have whatever accounts you want under the business. Everything business related is funneling through the business, and there's no back and forth between your personal funds and the ways to build your business. And that allows you to help with tax time, but it also helps you keep your business running more effectively. There's all different business credit cards. A lot of them have good promotional terms, like this one on the screen, a business preferred with Chase. They have 0% APR cards for 15 months, especially in real estate. If you're starting brand new, it's a cash intensive investment to get started. So if you need money and you know you're going to stick with this long term, that's a way to have free access to capital. So you could do that and run your business, let's say starting out with a credit card, like a startup, or again, just more so keeping track of things. And then some of the things mentioned on this little image is the asset protection, your legitimacy of your business, and it enhances your brand. If you're writing checks from a personal account in a business setting, and realtors don't write a ton of checks, but if you are, it looks better running from a business than from a personal account. Now, this is probably the most important slide on the screen, and I want to plug my accountant, SD Associates, because if you don't know, you need a resource to ask these questions and understand. You could get yourself in trouble looking on Google and trying to find these things, and that's where some of this information came from, but this was vetted by other accountants. It's important to know what qualifies and what doesn't qualify. The basic stuff like your advertising, all your education. I know Barb mentioned you might want to plug Triple Play, go in and taking a visit there for continuing education. That's improving you and your business, and it's a form of continuing education. All the mileage, auto expenses that we talked about, business travel, your meals and entertainment when you're going meeting with clients, any equipment, there's tax loopholes for buying cars. If you bought a car and you use it for your business, Section 179 of the tax code allows you to depreciate more of that vehicle than you would if you were to buy it in your personal name, and that gives you more tax advantages. If you're paying out employees, that's a business expense. There are retirement accounts, which jump to later in this slide. Health insurance, as a self-employed person, you're going to be paying health insurance premiums, any home office expenses, any office materials, professional fees like paying an accountant or a consultant or anything of that nature. There's a list of this screenshot has 101 different things, but the most important thing I want to emphasize on the slide is, again, having that accountant to ask questions to understand exactly what is and what is not a business deduction. And that's the key. I mean, I was reluctant. I have a finance background. I was reluctant to get an accountant for a while. And I like to do the taxes my own. I did TurboTax 1 year when I changed my business structure. And I said, you know what? It doesn't make sense from a time perspective to continue to spend time and effort trying to figure it out when this is the professional and they know the ins and outs and they do this on a daily basis, and they're able to guide you and give you information to help run your business effectively. They can evaluate things like, for example, the retirement accounts. As a self-employed, you have different options like a SEP IRA, Roth 401k, different or a solo 401k, the different components of that, different benefits that allow you to save money on taxes. And again, bottom line is make your business a little bit more efficient. So just circling back, Barb, if you wanted to mention something about Triple Play. I think you're muted.
Yes, at Triple Play, you're going to see some classes that are also going to be able to go through a little more detail on some of these different items that we're talking about. But Matt, I wanted to ask you the 101, the form that you have there with the age deductions. Are you going to be able to send us out a PDF on that?
Yeah, so this actually has a link to it on this document. So I could just take this and bring it into the chat so everyone has it. I don't know if we're sending out a PDF version of the form or a electronic copy of the presentation, but let me see.
PDF.
Let me see. I don't think it'll probably work, but I'll add this here real quick to the chat for everyone. That's just a link to that actual form.
Thank you.
Yep, absolutely. Okay, and just one thing I wanted to mention, going back to these money management practices, I use this Chase Ink card as an example. The large banks tend to have more robust features and more available to them, but I always recommend to my clients and also to any other realtors to make relationships with banks, especially the smaller banks, the credit unions, the local banks, because when it comes to your long-term relationships, Chase, quite frankly, doesn't care about the little people and the small accounts that they have. They're too big and robust. The smaller banks, the credit unions, are going to care more from a customer relationship perspective and a value perspective. If you want to go and invest in real estate down the line, they understand your business operations. They might be a little bit more lenient. When you get into that realm, there's a little bit more subjectivity as opposed to objectivity of what the lending practices are. So if you have a relationship that's been established over years and years and years of the business, they might be a little bit more willing to share and provide better service for you.
Hey, Matt, can I jump in?
Yep.
So I've had a Capital One business credit card for years and years and years. And the cool thing about that is I get points with it. And the cool thing now as a grandmom that I do with my points is I fly my son and his wife and my grandkids home for vacation with my points that I use from my business account. Don't anybody tell anybody else this. But anyway, there's a lot of cool perks sometimes you get with some of these business cards that you can do some cute fun things with. I just thought I'd share.
I can attest to that. I'm definitely a points nerd
Yeah.
when it comes to the different credit cards. So I could probably talk for 10 hours on that subject if you have any questions as far as the best options available. But you touched on it. There's a lot of benefits that are available with these cards. And that's not only just business, but it certainly applies there. And you see some of these commercials on TV and talking about it, the things add up. When you continue to spend, you're actually earning points and allowing yourself to offset some of your business expenses of what you're doing every day. And you're going to be spending that money, whether you sprayed a check, whether you pay in cash, whether you use a debit card. So if you can take advantage and use those things responsibly, it's another tool in your tool belt as a real estate professional. So this is a little bit more of an advanced tax strategy. And I normally wouldn't recommend it. And I think most accountants would agree with this. If you're not making over 100,000 in commission income a year, it probably doesn't make sense to incur the cost to set up the structure and alleviate the tax savings. But what you can do as a real estate professional, most agents are getting paid as a sole proprietor. So you make a commission, your broker pays you to your name. So they would pay me, Matt Scanapico. But you can actually set up what's called a qualified association, and it has to have certain requirements and be registered with the real estate commission. It's almost like another license to allow your broker to pay your qualified association. So I did this back in 2021. My qualified association name is MDSQA LLC. So when I get paid my commissions, I don't get paid to Matt Scanapico, I get paid to my business. So the business income funnels through into that LLC. And then from there, I pay myself a salary. So every 2 weeks, I get a salary from my commissions, paying, no matter what my commissions are, I'm paying that salary. And then I can also take other funds. So let's use that example of $100,000 in business income. I'm paying myself what has to be, in the eyes of the IRS, a reasonable salary, which is, again, where an accountant comes into play and gives you advice on how to strategize that, because there's not straightforward guidelines on what a reasonable salary is. But for this example, let's say it's $40,000 of that 100 you're paying yourself in salary. So that means you have $60,000 you can take in owner distributions to allow you to take money that's a little bit more tax incentivized, because what's happening is you're saving money on self-employment taxes here as opposed to here. When you're the employee and the employer on your W-2 wages, you're paying both sides of that. When you're taking owner distributions, you're only paying one side because you're not taking the employee piece. So it's a way to save money on income. And again, when you're not making a ton from commission income, it doesn't make sense to undertake this, because there's service fees to pay yourself W-2. There's cost to set up this structure and organization to allow that to happen. And it's another way to allow yourself to protect yourself too. So in an LLC, you have benefits, limited liability, and things like that that come into play as well on top of the structure. And this is not a consumer facing thing. So it's not like you can set up this qualified association, advertise as that business. It has to be strictly from basically behind the scenes, getting paid by the brokerage to allow yourself to funnel things through this structure. And it really does make a difference. And as you scale your business, it's ways to save money as well. Versus the typical structure is, again, the sole proprietorship. You're paying your self-employment taxes, business incomes all through your personal return, and you pay taxes on your business income at your personal income tax rate. So depending on how the structure is, and sometimes even a large brokerage, there's benefits beyond these two business structures. But I would say these are the two most common.
Hey, Matt, can I jump in? I told you I was going to ask a bunch of questions about it. I literally just started as an S-Corp maybe 6 months ago. So the owner distribution, does that have to be a set amount, or that can be as you need it?
No, you can take it as you need it. Let me add a couple things to that. So S-Corp is a tax status. Your qualified association is probably going to be an LLC who elects to be an S corporation in the eyes of the IRS.
Right.
So there's no rhyme or reason on schedule. There's certain things that an accountant would advise. Okay, you should take an owner distribution once a quarter, or once every other month, or sometimes it's when you have a big expense. It could be anything you want, depending on how you want to try to save on those taxes. But because I just actually went through the process of buying a house myself. With this structure, there's some regulations that the banks will look at. So in the eyes of, I mean, we're working with consumers trying to buy and sell houses all day long. Sometimes you don't think about it in your shoes. So you have to make sure that what you're doing is also going to be friendly in the eyes of the bank. So for me, because I wasn't taking regular distributions, they said I couldn't count that income, when really that's income I've been bringing in all the time. And I'm the one that's making the choice not to take that income. Why should I be penalized? But because of whatever the rationale was, the bank didn't look at some of my income that was real income. So in collaboration with the accountant, you could talk through different things. Another way advanced thing, but it's good for high earning agents, is like a deferred compensation plan. There's a lot of different tax strategies that can be implemented in the real estate business to allow you to save money on taxes. And some of them are so advanced, I don't understand them, but that's why you lean on an accountant who has familiarity with these ins and outs and can really advise. And getting a good accountant is key. And some accountants are specialized in doing taxes, but they don't have a lot of real estate experience. Real estate is definitely a very nuanced strategy, and you could parlay this into other avenues of the business. So if you're investing in real estate, there's other strategies there that would be implemented, which we're going to talk about next. But because you're a real estate professional, you actually get preferential treatment from taxes when it comes to investments. So there's a lot of benefits of different structures and just being in real estate as a whole. The IRS happens to like real estate as an investment. In talking about that, one of the biggest, I would say most utilized tax benefits in investments is a 1031 exchange. And this is for investment properties exclusively. You cannot do this on a personal residence. It needs to be a property that is only for investment property. It can be a business too. So it's not exclusive to investment properties. It's investment companies, businesses, properties. It needs to be like kind. So you can't sell a boat and turn it into a house. You can't sell a house and turn it into a motorcycle. It needs to be a house for a house. And it needs to be an investment property for an investment property. You can't sell an investment property and then go buy your second primary residence down the shore. It needs to be like kind exchange. 1031 is the tax code. And in enacting a 1031 exchange, you have to involve what's called a qualified intermediary. And they're the company that essentially holds the funds in escrow during the process of this transaction. So if you had an investment property and you were going to sell it, you would have some level of capital gains most likely on it. This allows you to defer those capital gains down the line. So if you sold the property, you can basically defer the total gain, assuming you replace that property with the exact same value. There's even a way to replace it for more. So let's use an example. if you had a property that was worth 300,000 and just for simplicity's sake, you bought it for zero, which isn't practical, but it had a $300,000 worth of gain, you could defer 300,000 of that gain to the future, as long as you bought a property that equaled $300,000 or more. There's different guidelines too here, as you can see, on the timing of it. So you have a certain timeline to identify properties, and then there's also a timeline in which you have to close. So it's a very time-sensitive equation on using this tool. So again, talking with an accountant, talking with a 1031 intermediary is important to understand the nuances of this business and allow this to happen. There's a lot of restrictions. It has to be through the same person, so you can't sell the property in your own name and then buy it in an LLC. There's a lot of guidelines that have to be met to make this eligible to defer those taxes. So you could do this multiple times too. So let's say you bought a property for $100,000 and you sold it for $300,000, you have $200,000 of gain. You buy that next $300,000 property with a 1031, the property appreciates, and you can continue to do this over and over again to continue to defer your taxes. Now, at some point in time, they are going to be due, but a lot of high net worth individuals, what they end up doing is using 1031 exchanges. Then they pass away and their kids inherit the property. And I'm sure some of you have heard the term stepped up basis. They get a stepped up basis to the current value. This is something that's going on in a lot of pushback in the political world to talk about that stepped up basis to see how it impacts real estate. So it'll be interesting to see how that unfolds over the coming years to see if that changes. But as of now, that's a really good tax strategy to help save money in investments. And it's another tool that you can work as an agent just to specialize in 1031 properties. If you have investors that are looking for properties, if you work specifically in investment real estate, which is where I started, there was a lot of this and I got involved in and understood it. I haven't done as much of it lately, but it's a really cool tool to, again, save money and continue to grow, in this case, more of a real estate portfolio than a real estate business. But all around, it's just a really good tool. That's all I have for the tax steps. So
while you're on that one, Matt, can I jump in and just add?
Yep.
A dear old friend of mine taught me just what you were talking about with the 1031 exchanges years ago. Her name was Denise Sands. I don't know if anybody remembers her, but she, her husband actually was my accountant, and I watched as they were gearing up to retire to Florida. And they had 4 or 5 investment properties in the area, and 2 of which they did a 1031 exchange for 2 properties down in Florida. And the other 2 properties they had up here, they made the point to move into for at least 2 years to make their primary residence. And that completely changed the status then from an investment to a personal property. And when they were done with dealing with that up here and kept from having to deal with the taxes that would have been on that, they moved into then one of the properties they had bought down in Florida and made that their personal property. So I watched as they did a very smart way of dealing with the capital gains on all of these investment properties they had up here.
Yeah,
and that's when I first learned about this.
One thing I want to add too, I forgot to mention, using that same example, okay, you had $300,000 worth of gain. You can sell for, or you can buy a new property, the replacement property, for less than $300,000. So let's say you only bought a house for $200,000. There's a $100,000 difference. That would be called boot. That boot is then taxable. So if you don't find the property that matches exactly or matches more, then you just pay the taxes on the difference. So if you can't find the exact value or find properties, you could still offset some of the capital gain. And people get very creative with this on a commercial level, on a regular residential level. You can do all different mix and match type strategies to make this effective and fit for your tax situation, because sometimes people might be in a low tax bracket that year, and that's when they want to sell their property. Or another year they're doing great in their real estate business and their taxes are astronomical. Well, that wouldn't be a good year to take that boot. So it depends. It's all funneling into the big overall picture. And again, this is for not only you as a real estate professional for advising clients, but also a lot of people in real estate end up getting invested in real estate. And it's good for you to understand that for your own purposes, not only for working with clients, but it has a dual function there.
Yeah. Well, very good.
We have some
Questions?
Q&A for anything we missed and anything we want to touch base on a little bit more.
I had a question. How much you can contribute towards your SEP IRA or like, retirement plan?
That is that's a tax accountant question. I don't have a SEP IRA, so I'm not familiar with those guidelines. I can tell you, going back to the S-Corp and the solo 401k, because I have one of those, you can contribute up to 25% of the W-2 wages you pay yourself. So assuming you pay yourself $100,000, you can contribute $25,000 to that solo 401k. And this is a little known thing, and only certain custodians allow it to happen. But a solo 401k can have two different components. People think of a 401k as a traditional 401k. It's a tax deduction, and it's it's before tax dollars that are getting contributed to it. But also solo 401ks can have a component, which is a Roth component, which is contributing after tax dollars. So it doesn't give you a tax benefit in that year, but it does give you the benefit of tax-free capital gain on that retirement account. So for me personally, I'd like to do a mix of, I want to get some deductions for what I'm contributing to my retirement account this year, but I also want to put some money away tax-free that's going to continue to grow in the Roth side. So I know that limit off the top of my head because I use it, but I don't know the SEP IRA myself. If you called my accountant, he can tell you that in probably 5 seconds, because again, they deal with that all day long.
No, you are right. I think that's what exactly my accountant does. They just whatever W-2 pay, that's what he's taking 25% and contribute. I was just always asking him that, can we do on other money which is left in the S corporation? And he said, no, you can't do anything. Only you can do on the employee pays. Yeah.
Correct. Yeah, and it may be the same for a SEP IRA. I don't want to misspeak. I'm just not familiar with it enough to be confident answering that.
No, you are right. That's a good question. Thank you for that.
Mm-hmm. Do we have any other questions in here, Barb?
I don't see any. Anybody else have any questions they want to jump in with?
A little short today.
Yeah, good information you shared. Very good. Thank you. I appreciate it.
Yeah, well, if nobody has any other question, does anyone have a question? You can unmute yourself if you do. Great. It looks like you guys did such a great job that there are no questions, but I'm sure there'll be questions afterwards. But a couple people did ask in the chat about the recording and the presentation. And yes, they are going to be, this is being recorded. It will be sent to all members, most likely tomorrow, and along with a PDF of this presentation. And it also will be, the presentation and recording will also be on our website. So, but look for the email tomorrow. But I want to take this time now to thank you, Barb, and you, Matt, for putting together this fantastic program. And thank you, Cindy, for joining us as an affiliate member. And make sure to check out our website to see what other B-Car Zoom Power Hours, we call them, are coming up. We have another one in a couple weeks with Dr. Sturdivant from Bright. So make sure to sign up for that one. And thanks, everyone, and have a great rest of your day.
Thank you, everyone.
Thank you.
Matt.
Bye-bye.
Thank you.
You got it.
Thank you.
Thank you, Sherry. And Sherry did a program for us in July that's up on our website about first home owner
This was wonderful,
buyers.
and I was so glad to hear you say
Yes.
use a local bank or a credit union, because establishing those relationships with the smaller banks or credit unions